Last week, Treasury Secretary Scott Pesent made a comment on Fox News that probably went unnoticed by most Americans, but we noticed. He reminded viewers that the United States once backed its currency with silver and sometimes gold. He also confirmed that America's gold remains at Fort Knox, quote, present and accounted for. For most people, it sounded like a history lesson, but for me, it brought back decades of conversation. Long before I covered the White House, I spent years working alongside Aaron Russo after his film America, Freedom to Fascism and supporting both of Congressman Ron Paul's presidential campaigns. Back then, we talked consistently about auditing the Federal Reserve, ending the Fed, and restoring sound money. Most people dismiss those ideas as fringe. Well, today, the Treasury Secretary of the United States is publicly talking about gold again. Does that mean America is returning to the gold standard? Probably not, but it does raise one fascinating question. What would actually happen if we did it again? Before we begin, take a look at his remarks.
What are we looking at here? These look exquisite.
Yeah, so these are the displays of our currency over the years. Some of it, like we used to have silver certificates. We used to be backed by silver, sometimes gold. And then in the 70s, we just went to what was called fiat currency, where you didn't have to keep gold or silver in the vault. If any of these are still outstanding, though, the silver or gold for them is the at Fort Knox, waiting for them to be claimed if so needed.
Have you visited Fort Knox?
I haven't. People on my staff has. We're going to the Treasurer's office. The Treasurer has been to Fort Knox, and I am happy to say all gold is present and accounted for. The U.S. has the largest pile of gold in the world, over $1 trillion at current market value.
And we're getting more gold from Venezuela.
Now, I'd love to see what would happen if you tried to walk into a Federal Reserve branch and hand over a gold certificate or a silver certificate and see if you can actually get your silver or gold. Well, joining me now is Micah Haynes from Noble Gold. Micah, welcome back to the Next News Network. So this is interesting. Let's start with what we just watched. Treasury Secretary Scott Pesent reminding Americans that our currency was once backed by silver, sometimes gold, and confirmed that Fort Knox gold is still there. Why did that 1 minute exchange generate so much conversation?
Yeah, it's a great question, Gary, and thanks for having me back on. Most Americans have never really thought about what gives money its value. And hearing the Treasury Secretary openly discuss gold and silver immediately brings those questions back into focus for us. Now, whether someone supports a gold standard or understands what it was like when we were on one, it does remind people that monetary systems change. What we're in now, again, a fiat currency system globally. Every single country in the world is on a fiat currency system. Just understanding that stuff is very, very important. And at a time when government debt continues to climb, inflation is also persistent, and central banks have been buying record levels of gold, I think all these things should be getting people's attention naturally. And so I think the conversation is less about whether the gold is in Fort Knox, but what are people doing themselves to emulate some of the protection and plays that the central banks are making right now to defend themselves against a dying currency, fiat currency.
You know, you bring up an important point in which I found this clip of Peter Schiff, and I want to play this
Look
for
exquisite.
you.
Yep, so
And get your reaction on this. He says the dollar's going to collapse. It's going to be replaced by gold, which, I mean, I would love to see that happen. But here are his remarks. I want to get your reaction.
Central banks are buying gold to back up their currencies. They're getting rid of dollars. They're getting rid of treasuries. We are headed for an economic crisis, again, that will make the 2008 financial crisis look like a Sunday school picnic. The biggest difference between the crisis that we're about to have and the one we had back then is this one is all in America. It's not going to be exported to the rest of the world. It's not a global financial crisis. It's an American financial crisis.
An American
and
financial
the world
crisis,
is now
that's
pulling.
what he says. What's your reaction to Peter Schiff there?
Yeah, I think he's hitting on a couple of important points. Definitely the trend of other countries dropping treasury holdings in T-bills and essentially dropping the dollar in favor for holding foreign reserves or national reserves in physical gold. That trend is underway for several years. We just last fall hit a point for the first time in 80 years where countries now hold more gold than they do dollars. So I think he's right about that. Whether it's an American only problem, I somewhat disagree. Like I said, every single country in the world is on fiat currencies. Fiat currencies always fail. It's just on what kind of time frame. And so the idea that all currencies will eventually end up losing so much value that we do need some form of return to a gold standard, I think that's a global play. I think that's why we see global central banks buying at record levels. And, I think it's going to impact us here with the national debt that we have, obviously with the foreign reserve currency too, having a kind of a stronghold on that. But that's quickly changing and the landscape is changing and gold is coming back to center stage.
I want to ask you a question about China in a minute because they have some very curious moves happening later this month. But before I get to that, long before I was covering the White House, I worked alongside Aaron Russo. After his film, America, Freedom to Fascism, I supported both of Ron Paul's presidential campaigns. And back then, people laughed at the idea of restoring some money. So let's start with the basics. What exactly is a gold standard? How is it fundamentally different from the fiat system that we've lived in since 1971?
Yeah, so the former gold standard that we were on up until 71, Gary, the way that it worked is that 40% of all the money in circulation had to be backed by physical gold reserves. And so let's just say there was $1 billion of currency in circulation. You had to have $400 million worth of gold reserves in the Treasury. And that actually was why everybody came off the gold standard in the late 20s, early 30s, is in the Great Depression, most countries wanted to be able to freely print money to bail out their economies, to deal with the Depression, to deal with breadlines. And of course, when you're tethered to a chaperone of gold, when you can only have so much money in circulation, you need to come off of that in order to print money freely. So we did that much later. Everyone in the world came off in the 30s. We came off in 1971. But now we have no tether to gold. We have no backing whatsoever. And what the real difference is, Gary, is something that's finite and limited and universally regarded as money, pegging your currency versus a currency that is unlimited and is being printed in an unlimited fashion for political reasons and economic reasons. And, we know that since 1971, the US dollar alone has lost over 97%, of its purchasing power.
It's just crazy when you think about that. How
It
much
is.
purchasing power we've actually lost since we've unpegged from gold. America, it has already changed its relationship twice during the last century, 1933, 1971. So walk us through those two moments real quick and explain why they permanently changed our monetary system to where our dollars lost so much value. And then I want to get your reaction on what's going on in China.
Yeah. So, not to give everyone a history lesson here, but when we operated on the gold standard and gold was money and money was gold, and all banks actually had something called the gold window. Back in the 20s, we had $20 gold. That was for 1 ounce. Now you could walk into a bank with an ounce of gold and get a $20 note. You could walk in with a $20 note and get an ounce of gold. So it was that convertibility. Again, gold was money, money was gold. And back then, Gary, most households, held about 10 to 15% of their total net worth in gold. And a lot of that was stored at the actual bank. But then come 1929, like I mentioned, the Great Depression, all countries wanted to remove themselves from a finite currency system. They wanted to be able to print money freely. So they all came off. But what FDR did in 1933 was he figured, okay, we need to do the same thing, but we don't want to lose confidence in the dollar. We don't want to come off the gold standard yet. So when they introduced confiscation legislation in 1933, they did two things. One, they didn't hunt down people personally with metals at home. Again, the banks were part of the system. Most people held quite a bit of their household wealth in gold, and that was held at the bank. And so as federally regulated banks, when this law came into place, it was the banks who backdoored, let's say, 70% of all gold holdings to the Treasury, right? And it was easy and instantaneous to be able to confiscate that metal. Now, again, those who held it at home, they weren't hunted down, they weren't going door to door, they couldn't actually find it. So those who held on to it smartly were able to actually benefit from the revaluation that came in 1934, where once they figured they had taken away most of everybody's gold, they repriced it to $34 an ounce from 20. So that's a 70% increase in the price. They also had, accumulated millions of ounces from the confiscation through the banks. And that allowed them to proportionally increase the money supply by 70% nominally because of the price increase, but also nominally based on the amount of ounces that they'd confiscated. So we were able to create a whole bunch of new currency based on that in 33 to then deal with, like I said, bread lines and the Depression and bank closures and bank runs. And then later that turned into us, using some of that money for the war efforts in the late 30s and stuff. And so it wasn't until 71 that we officially said, we're done. Yeah, there's no more gold standard. There's no more peg to gold. And that's really when we've seen that great devaluation of the dollar's value of 97% in the last, 55 years or so.
So what would happen, and I kind of posed the question at the open here, what would happen if somebody found a gold certificate in their grandfather's drawer or a silver certificate, and they try to walk into a bank branch or a Federal Reserve branch and said, okay, give me my silver, give me my gold? What would happen to that person?
I think they'd laugh you out the door. They don't hold gold now, and they certainly haven't been redeeming these notes for many, many decades. I think you'd be told, hey, this certificate's actually probably past its best before date. I comment Bessent's comment that you would still get it if you wanted it. I actually don't think that that's true at all. So, but what do you expect him to say? Right? He's also saying that the metal is all there. That I think is up for debate as well. A lot of analysts have gone through the 1974 auditing records. I have gone through them as well. What we can surmise from what's available publicly is that most of the metal that's actually there is not good delivery metal, which means it doesn't meet the international standards for purity, which is 95% pure or higher. What you can see from a lot of these records from the old and the last full audit, which was 1974, is that the majority of the bars that are held are what are called coin bars. Now, these were bars that were formed from the melting of all the coins that were taken away through confiscation, and the average purity of these coin bars is 88 to 92% pure. So, again, I think there's a big question mark as to whether it's all there, whether it's actually pure, whether it's actually good delivery. And then, of course, there's all these conspiracy theories that the French actually took a lot of it away in the 60s, and that was the inspiration for Goldfinger, the Bond film, where they actually take all the metal out of Fort Knox. And so sometimes, fact and fiction are, blended a little bit, and I don't know if we'll ever know.
Well, I want to ask you this because this is relatively new news. China tightening access to paper starting July 24th. China Construction Bank will no longer allow retail clients to trade certain leveraged gold and silver products tied to the Shanghai Gold Exchange. Less leverage, more fully funded metal. China continues steering capital towards physical gold and real ownership. Another one here, China making its biggest gold purchase in years. And two Wall Street shops thinks it's a signal that a bottom is in. Gold down 25% from its January all-time high of 5,400, sitting 10% below its 200-day moving average. China bought $5.7 billion in gold in the first half of 26, most of it in Q2, compared to $2 billion for all of 2025 when gold was rallying hard. In 23, right before gold doubled, China bought $14 billion. Morgan Stanley sees 4,450 by year end, betting on continued central bank buying from China and Poland, offsetting weak demand. So what the heck is going on? China's making these moves.
Couple things. The Shanghai Gold Exchange is predominantly a physical settlement exchange. So when you buy contracts to own gold and silver, you're actually settling those contracts in taking delivery of physical metal. The COMEX and the LBMA, the Western exchanges, are predominantly paper settled markets. You actually never really take delivery. And we know that a lot of metal has been flowing out of, eligible metal has been flowing out of the Western exchanges and going east into the Shanghai Gold Exchange. And so this move from China to tamp down the ability to buy paper gold and paper silver through leverage is, I think, one way that they're trying to eliminate a lot of speculation and also potential market suppression or, just manipulation. And the idea that you can buy, thousands of ounces of gold on paper and then flush them and sell them and to drive the price down. I think that they're finally waking up to the importance of physical gold,
Okay,
not
so,
just for them.
yeah, go on.
Oh, no, that's it. They're shifting to a physical market where the real metal is what's being traded, not paper products or the paper representation of the asset.
Okay, so July 24th, that's the date. What's going to happen to the gold price on that day? I mean, I could only assume if China's pulling this on that. We have now an actual. We got a hard date here, and I can only assume that we're going to see gold rocket at that date or around that date. Is that a possible scenario?
So gold's got a nice pop today. It's the 21st. The 24th is Friday. So, it does line up well with general seasonality. I don't know if I've talked about that on your show, Gary, where June and July often mark lows for both gold and silver price-wise for the remainder of the year. Seasonally, if you overlay 50 years of price action or price data, June and July are often the best buying opportunities, meaning you have the lowest prices for the year during the summer. Now, again, we're already seeing that price pop today. Gold's up to 4,100, just about, again, off its high from 54 earlier in the year. But I do suspect that coming into August and then going through the fall, we're going to have a very strong resumption of the upward trend in gold and silver. Geopolitical conflicts will help with that. Obviously, the elections here domestically, midterms, will probably help with that, all the uncertainty that'll be floating around. But all the stars are aligning for gold and silver to have many, many years of continued upside, obviously, with what central banks are doing and with where the dollar is going to be going and the trend of owning gold over dollars. I think that's not going anywhere for 5, 10, probably 20 years. And so, shorter term, I do think we'll get a pop coming out of this naturally weak price seasonality. But then these rules, again, are set to eliminate the paper manipulation. Of course, we know both gold and silver are both manipulated. The LBMA sells 300 times the amount of silver that they actually have on paper. It's the idea, Gary, that you could sell your home 300 times to drive all of the average home sale prices down on your street. You shouldn't be able to do that, right? If you own one home, you can only sell it one time. China's again making moves to be able to move in that direction where you can't over leverage and sell the assets that aren't there.
Okay, so if somebody was looking at their calendar and they say China's about to make a big move and they wanted to move right now, right? They want to move before China does, and they want to give you guys a call. Is there something you guys can do to help them expedite the process of a conversion for an IRA? I mean, how long does that process take?
Yeah.
And I mean, can you lock in a price now before China makes their move so that people can take advantage of this?
Yeah, so we've got a couple types of transactions. We deliver precious metals directly to you for cash purchases. When you're purchasing with non-retirement account funds, you can also have storage options. Those purchases are really quick. They happen in the same day. You send a wire, comes in within a couple hours, boom, your order's locked in. And then we deliver typically within about a week. And it's fully insured, securely delivered. We move tens of millions every month to people's doorsteps all over the country, Gary. Wow. Now, with retirement accounts, they're a little more involved, but we can have your self-directed precious metals IRA set up within 24 hours. And once that's set up, we do need to submit standard paperwork for transferring funds tax-free and penalty-free from your current conventional IRA to your self-directed physical metals IRA. But I've got clients who started this process, a few days ago, and their money's going to be hitting before Friday. So, they got moving last week and they're going to have their metals bought, secured, and ready to go in their segregated account within a couple of days. So it takes a bit more time. I wouldn't urge people that if you don't buy before Friday, the opportunity is lost. I just think that Friday, the news out of China, again, with kind of the natural seasonality coming out of July, we're going to have a really big bump through the fall for both precious metals anyway. So it's good timing in general.
Yeah, especially if you're looking back over the last couple of years and where gold was. I mean, a lot of people are kicking themselves for not taking advantage of the prices when they were, $1,200 an ounce. Yep. So this is a big date, and I really want to stress this because I just saw this when I was doing my research for the interview. So holy cow, this is right around the corner, and this could have a massive effect on the gold markets. But I want to kind of go back to what we were talking about with, the gold standard, right? Mm-hmm. Some people it could be just a total fantasy, pie in the sky, ending the Fed, something we'd love to have or love to get rid of. But let's assume, for a thought experiment, Congress announces tomorrow that the United States was moving towards some form of a gold-backed dollar. What's the very first thing that changes?
I think you'd have insane volatility in the bond market, in currencies, and likely in stock markets as well. I think you would have positive volatility to the upside in gold and silver because returning to some kind of gold standard implies a massive revaluation. And one of my earliest influences, one of my favorite people in this space, Jim Rickards, who I'm sure you're very familiar with, he talks about $28,000 gold. And what he's basing that on is if we return to a gold standard like we were on, where 40% of M1 or money in circulation needed to be backed by gold in the treasury, you would have to reprice the 8,100 tons or the 261 million ounces that we allegedly have. And so you'd need, based on his math, $28,000 an ounce gold just to be able to kind of return to the normal thresholds for what you need in the reserve of gold for the amount of money that's in circulation. Now, could it be higher? Absolutely. Could it be lower? Bessent's comment from this video you're showing, he says that it's $1 trillion at $4,000 an ounce. That is correct. 8,100 tons converts to $1 trillion at $4,000 an ounce. And that's where some people are saying, okay, we've got almost 40 trillion in national debt. Do we want to reprice gold at a level that would create, and actually I need to get into this just quickly, but would create new money in the gold revaluation account enough that we could actually sizably reduce the debt? And so there is an account at the Treasury called the gold revaluation account. It was used in 1933. It was used in 1974. When we reprice gold, we're not selling it. It just creates a new cash balance in the Treasury's gold revaluation account to be used as the current administration sees fit. So, at 4,000 an ounce equaling $1 trillion, well, we have 40 trillion in debt. Do they want to reduce it by 20%? Do they want to reduce it by 50%? Do we want to wipe out the national debt overnight? If you did, you'd need $150,000 an ounce gold. And so, how is it going to work? When are we doing it? My opinion is we won't hamstring ourselves by returning to a gold standard pre-crisis. Like Peter Schiff was talking about, we have a 1929 plus a dot-com crash plus a 2008 plus a 2020. All of these crises combined is what we should expect in the next financial crisis. I can't tell you when that's going to happen, but I would say it's sometime in the next year or two at most. And coming out of that, what do you think the Fed's going to do or the government's going to do? They're going to lower rates. They're going to print a lot more money. We created $9 trillion out of nowhere in 2020 in the COVID lockdown situation. This next financial crisis, I could easily see $20 trillion of new money being printed and injected into the economy in order to save it. And so, they will return to a gold standard eventually. It is inevitable, but in my opinion, it won't happen until after the next big print, and the next big print won't occur until we're in the midst of the next financial crisis, which is not far off. And that's why any kind of preparation that clients can make today, whether you're buying to simply diversify or reaching out for information or buying to get ahead of this China paper manipulation move, I can help you personally. You can call and ask for Micah. One of the benefits of doing this interviews, but also being a sales associate, is you can actually just pick the conversation up and ask for me. You can email me. I think there are all these reasons that we should expect to eventually see gold revalued at much higher prices, but how and when and what are the mechanics and what are the thresholds, all that stuff is yet to be determined. I think it's many years away.
That's wild when you think about that entire, that whole structure. Oh my goodness. And
it is.
They have to reprice gold to make up for the difference. Dude, that's insane. And
Yeah.
what that would do just worldwide would be.
Well, and one of the reasons why they wouldn't do it proactively too, Gary, is like we know that China's been buying gold like it's going out of style, right? June was their heaviest month all year. Q2 was almost double, like you mentioned, almost double from Q1. This year so far, just halfway through, I think it's almost 3 times what they bought last year. So, the pace in which they're accumulating gold, I wouldn't be shocked if China actually had more than we do in their total gold reserve. Bessent says in this video, we have the biggest gold pile in the world, 8,100 tons. On paper, China only has about 2,500 tons, but they're in second place. I wouldn't be shocked if they actually, pull back the veil and at some point disclose that they have 10 or 20,000 tons of gold. And if we reprice gold proactively, like we have in the past, then we're going to be, the flip side of that coin is, we could do wonders to our debt, or we could do wonders by spending money,
but then suddenly China's got all the gold, baby.
Exactly. So that is my biggest fear.
Yeah, I don't think we want to play that game.
No.
I think that the guys in the Treasury know that game too. Most people, they immediately think about the price of gold. I think the bigger story is everything else. What happens to the mortgages, business lending, retirement accounts, government spending if money creation suddenly becomes constrained?
Yeah, I think what would happen is definitely credit markets would become a lot more constrained. You would end up probably seeing a return to like 1980s styled interest rates. If you're over leveraged on your home, if you're over leveraged on your business, if you have too much debt, you'd probably be looking at, rolling your debt or servicing it at something like, interest rates in the teens. My parents talk about how their first home in the 80s, you had like, 15, 16, 17, 18% interest. I think that we would end up seeing huge problems in the credit market. Obviously, governments couldn't, in that situation, print their way out of it either. I don't know how they would get out of it at that point. One of the beauties of being a currency issuer is you can always print enough money to make your interest payments. But if they return to a system where they can't print money and you have this skyrocketing interest rate, your national debt becomes so much more expensive to service. We already know it's the number one item in the budget as far as the cost every year to service. It's more than military, it's more than defense, it's more than absolutely everything. It's the biggest. It's over $1 trillion a year. And so, in that type of situation, you would almost like accelerate some kind of sovereign default. And probably, again, not just here, but you would probably have some kind of global debt jubilee to say, hey, everyone, clear the decks. We're returning to a gold standard. Whatever gold you have gets you a seat at the table or number of seats at the table. Whoever has the most influence and say, and we would return to some kind of global gold standard like we have been on before.
Like
So
at the end of Fight Club.
yeah, that's right. So, like fashion, things kind of come and go out of style, right? Like the world and life and history, it's all just cycles, right? So
Yeah.
currency cycles exist, government debt cycles exist. You also have just kind of empires that fall, right? And I'm not saying that the U.S. is in a situation where that'll happen in the short term, but I think obviously the stage is set for something dramatic to happen and for these changes to play out. And so I think as an investor and as a retail investor, someone who's just trying to look out for themselves, you want to reduce your reliance on debt, you want to unleverage yourself, you want to get some of your wealth in a format that's outside of the system and outside of the currency, and holding physical gold and silver is the best answer to that.
So I want to ask you about what, because we talked about like what would happen if you brought a silver certificate or a gold certificate into the Fed. What would a return to some form of sound money fundamentally change in the role of the Federal Reserve?
It would absolutely change. It would basically mean they can't print money or manipulate interest rates anymore. They would probably become almost a futile institution at that point. I don't think there'd be much for them to do. Obviously, they would still become somewhat of a monetary steward, but essentially the Fed has two tools. And we've been using them like crazy since 2000, even more so since 2008, and even more so since 2020. The last financial crisis that we had is they lower rates and print money whenever the economy's in trouble. And if we took those two tools away because they can't print money freely without upping gold reserves, then they wouldn't be able to bail out the boat at will to deal with various crises, economic or financial or otherwise. So I think it would just limit their powers. They would have almost nothing to do. And that would probably mean that we have to go through some kind of major financial reset. Again, not just here, but globally. It would hamstring all central banks if we all did that. And I think obviously we would be better for it as advocates of sound money. As holders of gold and silver, we would benefit hugely. Again, this implies a massive repricing of the monetary metals themselves. And, think of, dollars as a unit of measurement that we use to price things, but that's a unit of measurement that's becoming weaker and weaker as time goes on. And so you want to have the ultimate form of money, which is gold and silver. And eventually when we do have a system shift or a system shock or a financial reset or a return to a gold standard, hard assets, but in particular the monetary metals, always make it through, and then they get repriced at whatever the new system is going to, and it's much, much higher. In those cases, you not only preserve your purchasing power, but you actually make generational wealth as well.
Well, we've already seen some states making moves, Texas and Florida, to start accepting gold for payment of services. And I mean, whether America ever actually returns to a true gold-backed currency or not, central banks around the world continuing to buy gold. We were just talking about China. I mean, they may not be betting on a formal relink, but clearly they're hedging uncertainty about the monetary system itself. So what message do you think that they're sending?
Yeah, I think it's one of confidence, risk reduction, and of just knowing history and cycles and how these things play out. I mean, how many PhD economists do they have working in these places that have studied the history books that currencies don't last forever, but gold and silver do? Thousands of years of gold and silver being treated as the ultimate form of reserve asset is again why they're kind of engaging in this record buying. And you mentioned 14 states. I'm not sure how many are doing it now, but
Yeah.
Gold and silver are money, constitutional money. They
Yeah.
are money, and they're recognized as such in the Constitution. And so a lot of these states have been trying to move legislation, and many already have, and some have them still underway. But the idea is that we shouldn't be taxed on the sale of gold and silver because they are money. You shouldn't be taxed for selling money. You can't technically do that. You're just exchanging one form for another, whether it's a certificate or the monetary metals themselves. So the idea that they're going to be eliminating state cap gains tax and stuff like that on investment in gold and silver because they are constitutionally money. Again, I think that's just recognizing their role historically, and central banks globally are doing the same thing. And they're saying, let's de-risk from any given system, any given currency, and let's just set ourselves up to have the most sound, confidence instilling, neutral reserve asset that doesn't have any liability on the other side of it. And investors need to be thinking the same way.
Now, you spend every day talking with families who are trying to protect what they have spent a lifetime building. What are they worried about today that they weren't worried about 5 years ago?
Yeah, and I'd say it's sometimes kind of heartbreaking to hear the stories about people having living paycheck to paycheck and barely making it. And I heard almost none of these types of calls prior to, let's say, 2020. Everyone seemed to be doing a lot better. So I'd say in the last 5-6 years, let's say since pre-COVID, the last round of money printing, the biggest thing is confidence, right? People aren't confident that their money's going to be there when they need it. If you're in your 50s, 60s, 70s, or 80s, you're not sure that you've got enough to be able to make it through the rest of your life. You might have a big 401k or a big IRA that's mostly tied up in AI and stocks and the things that we talked about on our last show, the things that the BIS are flagging as the potentially the biggest bubble of all time. So it's a matter of confidence in what worked over the last 20 years not being able to maybe protect you for the next 20. And you don't want to be investing by looking in the rear view. And again, when you forecast trends and you see what other smarter institutions are doing, and if everyone's doing the same thing, I think it's a really important signal to watch what they're doing and focus more on their actions and not so much their words. And so I would say, inflation's obviously a big concern, government debt, market volatility, and those things. But the general theme is that people are not as confident anymore about the value of the dollar, whether their retirement accounts are going to be able to cut it, keep up with inflation, whether you're going to have enough that's there. And we don't have the answers for everybody. It's all a case by case. And like I said, people can call and ask for me. I will just give you, again, as an investor myself over the last 10 years, working here at Noble Gold for 6, I've worked with thousands of families and clients, and it's a case-by-case situation. We don't ever say bet the farm on it, but everyone needs some gold and silver. And I've been saying that for years. And I think one of the most important things to take away from this conversation is everybody needs some. If that wasn't true, then these countries and central banks and institutions and hedge funds and billionaires, they wouldn't be buying it hand over fist either. So everybody needs some. And if that brings you a little bit of confidence in your overall portfolio and financial picture, then we're happy to help.
Micah, last question. We've talked about history, monetary policy, the future. If Scott Pesent's comments accomplish one thing, they reminded Americans that the dollar hasn't always worked the way it does today. Is that really the biggest lesson here? Understanding how money works is just as important as understanding where to invest it?
I think it is, and I think the big takeaway is that, what people view as money is actually currency. And the current form of the currency that we live within is, it's 55 years old, but it's not the way that it always works. But currency cycles and the eventual erosion and devaluation of a currency to the point where we could experience high or hyperinflation, the West just hasn't been through that. And it doesn't mean that we can't be or can't experience that, but there are obviously many historical examples of hyperinflation: Weimar Germany, Venezuela in 2020, Zimbabwe, Turkey and Lebanon. And we think that we're maybe somewhat immune to these problems, but of course, look at the fiscal situation, the financial or the national debt, and all these things, and the evidence is piling up that we probably have to face something like that. So, understanding that money and currency are two different things, and that again, constitutionally, gold and silver are money. Universally and historically, gold and silver are the best forms of money. I think just understanding the difference between money and currencies is one important lesson, but then the cycles and history repeating, right? And what's the saying? Voltaire is, history doesn't repeat, but humans do. So we're bound to see some of this stuff again. We're bound to see some type of change at some point. Obviously, it's up for debate how quickly we can get to this next crisis and what happens on the other side of it. But you'll never go wrong with holding some physical gold and silver, and there's thousands of years of backing to help you understand that.
Mike, I'm just looking at this video here. We have it on a loop, and here's the Treasury Secretary walking the halls of the Treasury, and I've walked past that building dozens of times, never been able to go inside of it. And we have, this gilded frame of all this currency, and I love going into like a coin shop, and I love looking at the old currency and seeing the silver, payable to the bearer on demand, silver or gold. And I think it really is just remarkable to hear these remarks from the Treasury Secretary, especially when he's like, "Oh yeah, you could just bring your paper back in, and we'll reimburse you." But I just think it's remarkable to have this kind of inside look inside the Treasury, and when you see the currency on the wall, I love looking at it, and I don't know, I'm just reflecting on this piece here. Any thoughts on that, real quick?
Yeah, I think, looking at these older notes and all the various iterations, and, it definitely brings up the idea that, again, currencies don't last, right? How many different variations have we had? Some were backed by silver, some were backed by gold. You've got old constitutional coins that, hyperinflated. You've got all these various currencies all over the world. $1 trillion note in Zimbabwe buys you like a beer, right? But at one point in time, Zimbabwe was an extremely prosperous resource nation, right? And so the idea that the currency of the day, again, it's a yardstick. It's a unit of measurement. At some point, the government will find it convenient and or necessary to change the currency unit in order to reinstill confidence. And the thing with currencies, again, is fiat currencies always fail. Voltaire said that back in like the 1600s. Fiat currencies always return to their intrinsic value of zero. Now, if you go through Western civilization and in the history of currencies, over 700 of them have come and gone in the last 500 years. And the average lifespan is about 40, right? So from 71 to now, we're on the petrodollar as the world's reserve currency, slowly fading, but surely. Do we have another 5 years, 10 years, 2 years, 20 years? I can't tell you, but I can tell you that the repetition of history and cycles and currencies not being forever, but gold and silver are. Again, that's just one part of why physical gold and silver need to be a kind of part of the defense team on your portfolio.
What do you think about the new Trump coin? The Treasury just announced that they're making a coin with President Trump's face on it.
Yeah, I think it's obviously, I think there's only one other historical example of a sitting president putting himself on any kind of coin. It's whether you like Trump or not. I think it's obviously a bit of a kind of vanity piece. Why not? If you can do it, go for it. It would obviously sell for a huge premium from the mint, just like we saw the 4th of July Liberty Bell, the 1 ounce gold coin was selling for $20,000, right? $20,000 when the current market price is $4,000. So if you think it's that collectible and whatever, go for it. The silver 1 ounce Liberty Bell, I think, was priced at like $1,500 an ounce when silver is currently $56, $58. So
is the Trump coin gonna be minted in gold?
I think
so.
I mean, I think it's supposed to be a 24 karat gold coin. And
Wow.
the buffalo is 24 karat. The eagle is 22, which is about 92% pure. It's full ounce of gold in there, but they are made traditionally the way that they were when we were on a gold standard, where people carried them around in their pocket. So there's a little bit of alloy in it to strengthen it and make it scratch resistant. But I think it's a 24 karat coin. Correct me if I'm wrong. I don't focus on collectibles and numismatics very much, and as a firm, we don't either. A lot of places will try to push higher priced premium products and collectibles on you. We stick to what's going to get you the best bang for your buck, the most metal for your money, the most ounces in your portfolio. As an investor, that's how I structure my own portfolio. So, sorry if I don't have all the details on the most recent collectible.
Sure, yeah. I mean, numismatics, they're in their own category, but you guys specialize in the real stuff. So, Micah, thank you so much for joining us.
Thank you, Gary.
We'll have you back again soon. So, Patriots, today's conversation wasn't really about predicting the future. It was about understanding the past. America's relationship with gold has already changed twice in the last century, 1933, again in 1971, and both transitions happened much faster than most people expected. Does that mean another monetary shift is coming? Well, nobody really knows, but history reminds us that monetary systems do evolve. And the real lesson isn't to predict exactly what policymakers will do, it's to understand that no monetary system lasts forever. So whether you're an investor or simply someone trying to protect your family's future, understanding how money works has never been more important. So if you'd like to learn more about physical precious metals and how they may fit into diversifying long-term strategy, visit nextnewsgold.com and request your free gold guide. I'm Gary Franchi for the Next News Network. Thank you for watching.